Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking for a double 1, 2, 3, 4, 5 in blue to finish the green wave 3, then the green 4 before then a final push to the upside in the green wave 5. In this scenario, it is nice to see that the wave 4 is now officially longer than the wave 2 in time. If you take a fib time from the high of 1 to the low of this wave 2 to then the high of wave 3, you're comparing 2 with 4, and now this range over here in a potential wave 4 has passed the 1-to-1, which is what we like to see. When we look at the retracement targets for a wave 4, we pull them from the low of 2 to the high of wave 3, and then the most common target area for a wave 4 is between the 302 and a 0.5, which is between 33.6k and 32.2k, with the 236 still being common but a little less common to bounce on the 236 and continue, which is at 35.3k. The invalidation of this scenario is price moving to the downside and hitting the 0.618, which is sitting at 30.9k. You can also see I do have a key level over here at 32.5k, which is a 1 hour level, because on the 1 hour chart we have a gap over here, and in trending environments gaps tend to be very nicely respected, as we have seen over the past couple of weeks, and this is a gap with the high of the gap being the low of this candle, and therefore it's interesting to keep an eye on this level, because we then expect price to hit this level and move away from this level. The moment price is going to close candles inside the gap, it increases the probabilities for price to fill the gap and move to the downside. But as you can see, the 0.5 is still below the key level, so that's okay. We can move to the downside and then eventually up. But of course, we don't want to hit the 0.618. If we look at the bearish scenario, then we also still expect a move towards the upside, but after a move to the upside, we're looking for the end of the impulse and a bigger correction to the downside. So instead of in the bullish scenario where we're looking for a 3, 4 and 5 yet to come, in the bearish scenario you're looking for this move up but then a bigger corrective structure to the downside. That is the big difference between the two. If we look at this bearish scenario, we then have a 1, 2, 3, 4, 5, where we're also looking for this wave 4, but preferably this wave 4 is going to take a lot longer still in time. If this is your wave 1 and this is the end of your wave 2, you take a fib time from the high of 1 to the low of this wave 2 and then put it on the high of this wave 3. And now you can see that the 1-to-1 of this wave 4 would then be on Friday, the 1st of December this year. So preferably, price then continues to range till that date is hit. A minimum target usually for a wave 4 is the 0.618, which is sitting on Thursday, the 23rd of November this year. The most common target for a wave 4 is between the 1.236 and the 1.618, which is pulled from the high of 3 to the current low that we have for this wave 4 over here, which is sitting between 38.7k and 40k, which is a very interesting target indeed, because this area is in confluence with the golden target box here between 38.5 and 39k, as well as the blue box just above 39.3k to 39.7k. After that is hit, we then expect a bigger retracement to the downside in either another wave 1, 2, and then continuation to the upside in bullish market structure, where we're then looking for a 1, 2, 1, 2 continuation, or we're looking for this to be an A, B, C, and then bearish continuation, where the probabilities are mentioned in the cycle macro high time frame video that I made yesterday, so make sure to check it out in the playlist on my YouTube channel. If we then go to the micro time frame and we zoom in to what has been happening locally, then in the morning I mentioned that if price can move towards the upside, create bearish CVD divergences, I would be looking for a potential move to the downside to take the 886 here as well, because what we saw locally is price moving to the downside. We had a little bit of a bounce, and I made my update when price was over here, and in the probability section at the end I noticed, or at least mentioned, that the 886 was hit over here, which means probabilities are higher. Any move towards the upside is a wave C or a wave Y, which therefore increases probabilities to eventually take the lows. Now price moved up, moved down, hit the 886 for a second time, which increases the probabilities even more, before then moving up. Now we did have some bullish CVD, as I'll show you in a second, but once price moved up over here, hitting this target box for the second time, we then had the bearish CVD divergences we were looking for. Very nice indeed. And now we get this sharp move to the downside, where now we have a triple bottom, which is even more reason for price to take these lows over here. If price then continues to the downside, we have two support areas over here. The first one is between 36.4k and 36.6k, and the second one is between 36.1k and 36.2k. Now we do have to pay attention for price to potentially wick the lows, close above, and then move away from these lows over here, which would be a swing failure pattern. And one of the reasons I at least mentioned it in the video is so far this looks 3-wavy to the downside and not like a 5-wave structure, an impulse in a 1, 2, 3, 4. And then a wave 5, right? It looks very much like a 3-wave structure. One could potentially label this as a wave A or 1, and then this being a 3-wave corrective structure in a W, X, and a Y, or an A, B, C. But it's a little bit forceful, so at least, you know, if this is indeed a 3-wave structure, we could be looking at a potential swing failure pattern and then continuation to the upside. So as always, observing the reaction is very important. The moment candles close below this level, below the triple bottom, probabilities increase to move to the downside and hit these target boxes, which is very nice indeed. You also see a green line over here, which means there were bullish CVD divergences with these candles over here, this little range before this push and the move to the downside, but the bearish CVD divergences are on the right side of the most recent high, which is over here, right, where this is the pivot and this is the pivot. And regarding the bullish CVD, you have a pivot on the left and then the pivots on the right of the most recent high, which therefore has a lower probability of playing out, increasing the probabilities of the bearish CVD. If we then do look at the CVD divergences, then here locally we had bullish CVD divergences as well, but these have played out. You can see over here, higher low on price, lower low on the CVD. What's actually interesting, by the way, is that here we did grab the low on the AGGR chart, lower high here on AGGR, but on the chart this was a higher low. So that was quite interesting, of course, but nonetheless, even though price then moved up and down, we did have here bullish CVD divergences, higher low in price, lower low on the yellow CVD, right? Price moving to the upside, but this is where it then created the bearish CVD divergences, which you can see over here. Lower high on price, but if you look at the horizontal cursor line, then over here you'll see the yellow like high on the CVD is higher than my horizontal line, which is a bearish CVD divergence here. Lower high on price, but higher high on yellow, where the target is the triple bottom that we have over here, right? So that is definitely a level of interest, and we observe and wait and see what happens locally. If we then look at the probabilities of these different scenarios, then if we zoom out, we are simply still looking for the double top to be taken and price to go above 38k, where the first big area of resistance is the golden target box here between 38.5 and 39k. Of course, the trend in general is towards the upside, right? And the highest probability also still locally of this bigger range, being then a wave 4 for at least another push to the upside in a wave 5 has the highest probability, where then we are looking for preferably another 4 and another 5. On the micro here locally, on the lower time frame, the highest probability is to take that triple bottom. We have bearish CVD divergences as well. We have, of course, liquidity below the triple bottom. So based on probabilities, that is at the moment the highest probability, or based on Elliott waves and the confluences, it's the highest probability to take the triple bottom here and then observe the reaction for either a swing failure pattern and a move up. If we start closing candles below, I'd be looking for the blue target box that we have down here for support and then observe the reaction over there. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.